So thank you everyone for joining. My name is Juliana Kishina. I own a company called New Age Financial Consulting, and we are accounting, tax, and business consulting strictly for the interior design space. We also host an annual business retreat. It's called Empower the Designer. Both links are down here. This year's Empower is focused on AI, legal, and growth. So if that sounds of interest to you, please go to either website to get more information. But for today, we will be focusing on what designers get wrong about markups and how to fix them. So one of the first things we do actually with all of our clients, whether they're existing clients or whether they're new clients and they're onboarding with us, we like to review and understand the difference between profit on product and profit on design time, specifically fees, and how do you charge for fees. So one of the first things we also start with is reviewing your contract, right? What does your contract say and what does it allow you to do? So much of our billing practices will circle back to our contract. So make sure that you differentiate profit between product and design, and then make sure that your contract is aligned with both of those things as well. Remember to include reimbursables, something that a lot of times can be overlooked. We always recommend a reimbursable, not necessarily, we don't ever call it a markup, we'll call it an administrative fee instead, which will be 10%. Make sure that's in your contract. So for anything that you're billing that's out of pocket, that could be samples, that could be Ubers, that could be meals, obviously any travel. Do we get a copy of the presentation deck? That is a great question, and I could circle back with Business of Home and definitely get back to you. So make sure that you're, again, marking up reimbursables, and that, again, that's in your contract. Make sure also that your contract, I would tell you, is very, very clear for the client, and that you're clear on how you're pricing. Are you pricing and marking up by the client contract overall, meaning it's a fixed, if it's a fixed markup, it's 30% across any product that you sell, whether that's retail and that'll put you above retail, or whether that's something that you're buying off of Etsy for $1, and you got a really good deal on it, and then you're still marking it up 30% because that's what the contract allows you to. Or are you marking it by vendor? And at that point, the contract may be a little bit gray. It could say something like, we provide the best discounts possible. We're sharing, not necessarily splitting. To me, splitting means splitting and sharing, I guess could go either way. But to let the clients know that you are a buy the trade, right, from the trade, and that you are marking up based on what your vendor relationship is. So just make sure that you're clear in what your starting point is, and so that will then drive a lot of this conversation. We'll talk a little bit about vendor relationships and how to ensure that you're utilizing them to the best of your ability. So yesterday we had a client call, and it's a firm that I would say does a good amount of volume. They're a couple $1 million, and they also have a presence in terms of a retail presence. And so one of the conversations we had yesterday was to ensure that the trade accounts, they're buying from one trade account by vendor. So even though they have two entities, what is their internal structure and internal flow? Is the store buying from all of the vendors and then reselling it to the interior design firm? I believe we have a slide on it, but that can be a really great way to actually get some extra markup and margin in the door for you on the interior design side. So if you have what I call, even, we use this term sort of jokingly, but a storefront, but light. So not necessarily a full-blown showroom, not necessarily, it doesn't even necessarily need to be to the trade or to retail. It's just something that you're able to say that you have a store, and that will change your buying power with vendors. So is that something that you're aware of? Is that something that you're reviewing? Are you pulling a vendor report annually to say, oh my golly, I spent X amount of dollars with Hickory Chair. Am I buying them from a showroom or am I buying them direct? Circle lighting and visual comfort, I feel like, are always a great example, especially after they got divorced and then got remarried, right? That changed discounts for people. So are you evaluating that at least on an annual basis? I wouldn't tell you quarterly, but at least at the end of the year. How much did you spend? Who did you spend it with? And really, did you buy smart? Something that we'll talk a little bit about today, not necessarily a big deep dive, but really understanding. So yes, you should be making money on product. So remember, an interior design firm is very unique. They have two very distinct business revenue streams. They have product, which acts like a store, right? You're buying and selling, and then your professional services. So somebody like myself in the accounting space, I am only professional services. I'm not buying and reselling anything. But on the interior design side, it is more challenging, right? You have a slightly different business models for the two. When we look at financials, we try very, very hard to separate the data to make sure that we have the information to have separate data and to inform the designers and make sure that they're also very, very clear, right? How much did we generate in product? How much did we generate in time? Do we know if our design fees were profitable? I don't care if you're fixed fee or you're hourly. I think you could be profitable on either way. I don't think you necessarily need to be tied to one or the other. I also think you could be a hybrid. You could be fixed on design services and potentially hourly on architecture and hourly on install. So all firms work differently. I don't think it's black and white, but do you have the data and the metrics to understand if what you're charging for your time is actually profitable? So a lot of times too, use those numbers, compare it to your salaries, compare it to your overhead expenses. A lot of those comparisons actually have a very, very similar calculation in terms of, are you 3 times salaries for your time billing? If you're 3 times salary for your time billing, your time billing will most likely cover all of your overhead expenses, assuming that we're not doing anything crazy, taking out thousands and thousands of dollars in something, travel or PR, or something that's way out of budget. But normally they just wind up lining up. It's a great formula if you have it. I think, again, we'll talk about it a little bit and potentially on another slide, but please, please, please also remember, track your time. Yes, it's painful. Yes, I get it, right? We're in the time tracking space as well. Software plays a big part of this, but you need that information to then also understand, were you profitable on a fixed fee? So if you're fixed fee and you're not tracking time because the answer to yourself is, well, I'm fixed fee, it doesn't matter. But you have no idea, right? Did you wind up being super profitable on that kitchen design, or did you wind up losing money? If you are fixed fee, remember again, contract. Your contract matters. If you are fixed fee, are you capping the number of redesigns? Are you capping the number of reselections? Are you putting in something like, well, you should have your hourly rates in there. So that way, if something is out of scope, at least it's in your contract to allow you the ability to charge for it if you choose. So the other thing I think actually to keep in mind, specifically regarding time tracking, is that you should not only be tracking billable time, but also your non-billable time. So is the team, if you have a team, or is it just you, are you good about getting that data into whatever software that you're working in? Studio Designer, Timely, Toggle, right? Again, there's not necessarily a right or wrong answer. It really is muscle memory. So what's going to work best for the team? Harvest is a really popular option as well, especially if you are fixed fee, right? Harvest gives you that really great bar on all of your projects to say that you've done well versus the fixed fee versus you haven't done well. And then remember, something like ordering and expediting, how do you track for that? Is the team clear as to when the activity becomes potentially non-billable for ordering and expediting versus design development, right? Two different things. Make sure that your forensic reporting on it is accurate. And then finally, just at the end of a project, when you're complete and install is done, do you evaluate, and I would say both of those metrics, do you evaluate profitability on time, and do you evaluate profitability on product? Two separate evaluations. I would not combine them. I wouldn't run a report to say, okay, well, we finished the Smith job and our margin wound up being 35% and include my time. That is not accurate, right? Then that's not your margin. So make sure that you have the tools and the ability to pull profitability on product, and then profitability on time. I made a quick little note in here that says know your employee cost. So yes, right, we should all know our employee cost. How much is somebody's salary? How much are all of their benefits? And their benefits could include things such as medical, other health insurances, medical, vision, dental, employer taxes are obviously in there. And then even additional compensation, 401k match, 401k profit sharing, etc. So just make sure that you really know your all-in per employee cost. So let's dive into product profit. Depending on the software you use, you should hopefully have a report that allows you to understand what your margins are on each of the things that you're selling. A lot of times too, when clients come to us, something we ask is, okay, well, where do you think you're making money, and what are you selling potentially the most of? Like, what do you think you're doing? What are you selling? A ton of custom furniture? Are you just reselling a ton of millwork? I don't know, because you have a lot of projects in that particular phase. And so then remember, margin and markup are two different things, right? It is all a math game. But if you're looking to end around a 30% margin, and again, remember, we're only talking product, right? Product, not fees. 30% margin is a good number to shoot for. 30% margin would give you on average, a 23% markup. 23%, I would say, is on the low side, right? Especially if in an industry where there are no industry standards, but there's definitely industry averages. 30 to 35% is still a very common number when it comes to actual markup. So markup, not margin. But then you have a lot of additional factors. What do you do with something like freight? Do you pass along actual freight and mark it up 30%? Do you call out freight separately in your contract and reduce that markup to 20%? Do you mark up your warehousing and your receiving costs? Are you an advocate of something called fixed freight? We started seeing a lot of fixed freight actually back during COVID. That became very, very popular because freight was out of control in terms of budgeting, and it became a way to present information to clients and not have any surprises, right? So if a proposal went out, if product went out for $100,000, freight was estimated ahead of time, and we would tell the client, okay, we're fixed freight, it's 20% of your selling costs. So your proposal is going to be $100,000, and then freight that we charge is $20,000. Now it doesn't matter then how much we are getting charged for inbound freight, right? So then Crate and Barrel could come back and skyrocket some freight on some items, but it doesn't matter. We are then evaluating our reports, all going back to reports. We're evaluating to say, okay, well, if we're 20% fixed freight, is that enough of a margin for us, or does that drag us down? So remember back on the previous slide, we just said, so at the end of a project, are you reviewing to understand what your total margin and or markup, right, was on a project? And so if you typically mark up freight at a different number than 30 or 35%, that's then going to drag down your overall profit on a project. So you really may wind up at 20%, 23% markup because freight wasn't marked up the same as other items on the contract. We see sometimes that same logic with receiving and warehousing, and I understand, right? Receiving and warehousing can be a really, really expensive line item. And then if you're marking it up 30 or 35%, that number just skyrockets. So what do you do? How do you solve for that? I think being really upfront with clients is helpful. And we'll also talk about that on another slide a little bit to make sure a client is very clear of how you present information. Our largest firm is a New York firm, and they're huge. So they're about 25 million in revenue. And they made a decision a couple of years ago that none of their receiving and warehousing will be billed through us as a firm. So we give up that discount, we give up that markup, We do charge hourly for obviously all of the coordination of it, but we gave up that markup because the pushback from clients on those types of projects that were just every project was millions and millions of dollars in furniture was a business decision. They said it's not worth the argument with clients to try to collect the receiving warehousing fees plus our markup. Their markup is a fixed 35%. And so the billing for the warehouse goes directly to the client. And that's not a line item on our project reports. That was a business decision that they made, but we were constantly chasing the warehouse fees. And so now we're out of it. The client contracts directly with the receiver. We're also out of the insurance game, right? So when you're dealing with receivers, most of them, and I would actually tell you all of them, but most of them are never covered for full losses. So is it clear to your clients in your contract that they are responsible to obtain additional riders, or they are responsible to work with the receiver to obtain additional riders? But if a receiving warehouse blows up, the limits on their insurances will not be enough to cover one-to-one, right? So they're probably insured up to $1 million or up to $2 million. But depending on the level of projects you work out or you work with, one home could be $1 million. One home could be $3 million. So again, if it's written out in your contract and you're clear with your client, just be very, very certain of that. If they are contracting with the receiver, they're aware what the insurance responsibilities are. And if you are the one that's in the middle, that you're also very aware of what the insurance responsibilities are. We work with another firm who actually will add riders onto their policy. It's not necessarily a preference. I just think it's come about. It's a firm that's been around a very, very long time. And it's come about out of client requests. And so we will add on a rider. We will pass that cost along to the client. And we will also, again, charge an admin fee. That would be something that's a reimbursable. Something else in terms of product, I think to make note of is understanding different categories, right? So here we're breaking out what we're typically reselling. And I would tell you, it's funny, this is a place to be detailed, but not too detailed, right? So this isn't everything, right? This isn't, well, I'm not separating out door hardware versus a finial versus a curtain rod, but I am looking at the big categories, especially if I know, as an example, so custom upholstery is a great line item, right? There are a lot of firms that will mark up custom upholstery completely separately and differently than a flat 30 or 35% markup. And what is custom upholstery? So custom upholstery in this particular example is true custom, a true custom sofa drawn entirely by the firm and then produced entirely by the firm with a custom upholsterer and obviously custom fabric. And so in that particular example, right, there is no retail cost. We're setting the retail cost and we're drawing the piece from scratch. A lot of times custom upholstery can be a really, really great moneymaker. It could have margins of like 50, 55, 60%, depending on what your price point is with a custom upholsterer and with the workroom. We've also seen some clients do very, very well when it comes to product lines. And so are you working within a upholsterer or a workroom that's potentially a little bit bigger and they ran some prototypes for you, right? And then there's a cost with prototypes, but then it does allow you for every time, for the repeat orders to be at a much cheaper price point. And then you're still making money when you're reselling the product. And again, with a much, much different margin. So calling it out like this on your income statement, so you could very clearly and very easily scroll down it on a monthly basis to understand, okay, wow, I did really well in custom upholstery. I have used this example, I really think, for 10 years because it has stuck with me for that long. And it's actually pillows. And we have a number of firms who make custom pillows, and they're using remnant fabric, and they're using their custom upholsterer, and they're charging $400 to $500 a pillow. But that margin, right, it can be, right, I'm going to say ridiculous. I mean, it's fantastic and phenomenal, and that's great. But then I want it as a line item on here, right? Because I want to be able to understand, well, how much did I sell in pillows? What was my cost? And what was my margin? So this is an area to focus on. And if this isn't something you have in your current reporting, it's something that you absolutely need. So depending on the software that you use, your software can produce data like this, and then the team needs to remember it's data in, data out. So really good data in will produce really good data out. But this is absolutely something to evaluate and to dive into. I would tell you monthly, if not monthly, then quarterly, and then if not either of those two, then annually. At a minimum. So somebody's asking about which report produces that in Studio Designer. So your income statement in Studio, as long as it's set up correctly, will give you this breakdown, right? This is actually a screenshot right out of Studio. So it's part of our income statement. So this is the revenue side, then there'll be a cost side. In Studio 2, there's a great section of reports under the project worksheet profit section, and they will give you a plethora of data to your heart's desire, with lots and lots of filters and ways of looking at the data. So remember, I would encourage you to start by looking at profit by project. Profit by project. I almost said product. So understanding, did Mr. and Mrs. Smith, wow, did I do really well there? What was their budget? How did I make out on these particular line items? Oh my golly, their millwork was at $500,000. Well, and our markup on millwork is only 20%. But they also bought, making it up again, $500,000 of custom furniture. So we made up for the fact that our millwork profit was potentially a bit lower, and our custom upholstery made up for that. But in that same set of reports too, you can also run to understand, okay, what is your profit on a particular vendor? So maybe it's on the next page. Well, I don't actually, vendor relationships. But if you don't know that off the top of your head, I would say you should, especially for your best performing vendors or from the vendors that you work with the most. So anyway, that subset of reports is fantastic. Yeah, that's a really great question. So what is your opinion of incorporating the freight and warehousing into your markup? I would tell you that you should, right? You should be looking at it in totality. I would also tell you, so if we're working with 100 firms, what we see the most of is client markup. So what does that mean, right? So your contract states that you're a flat markup and you mark up 30 or 35% on every single item that you buy. So that goes back to, it doesn't matter if it's Pottery Barn and you are getting a 20% discount, you're still marking it up 30%. And again, it doesn't matter if it's Etsy and you're buying it for $1 and it's really worth $100 and you're buying it for $1 and marking it up 30%. And with contracts that are a fixed client markup, we see the most of freight and warehousing. If you're a fixed client markup, your warehousing and freight is also fixed, meaning that every freight item, every freight charge that comes through is marked up that same number, 30 or 35%. You're not reducing markup on freight. It is a cost of doing business, right? It is a cost of getting that product from point A to point Z. I would tell you that's also the same. Well, warehousing can be a little bit different, right? To me, again, freight is part of the cost of the product, so that markup just flows. Warehousing, we do see some movement on. So it's not necessarily always 30 or 35, especially as projects get bigger and those warehousing fees get bigger. 20% is common, and or that client markup of 30 or 35% is still also common. Just to make sure that your client understands, right? Warehousing can be a really, really big number. Somebody's just asking about some studio training. Yes, Studio is a really great software and 20 years of learning, and here I am. Anyway, that's a great question regarding freight and warehousing. Something else just on here to remember is, what do you want your ideal margin to be? So we spoke a lot about, well, if the client contract goes out at 30 or 35, that makes it easy, right? Everything you're buying and you're reselling is that number. But what happens if you're marking up by vendor, right? And so actually, let's just go to the next page. So what happens when you're marking up by vendor, and why do you choose one over the other? Well, again, if you have really, really great buying power, marking up by client could be a disadvantage to you, right? You may wind up losing money. If you say to clients, well, I'm going to mark up 35%, but your four hands discount is 70, right? You'll actually make less money that way. So you need to understand how you work with vendors to then come up with the best pricing strategy. I would also just politely urge you and tell you that I think you go with one way or the other. We get asked that question a lot. And I wouldn't go with marking up by vendor, and then also marking up by client. I would really pick one way and I would stick with that way. But I would understand, or I would like you to understand, well, which way is going to give me more profitability. So if you have, and this goes back to what I call storefront light. And so what is storefront light, right? It is, you could be a showroom, you could be a trade showroom, you could be a retail showroom, you could also just have a storefront, and it could be for somebody walking in off the street. You could also, again, have maybe designers shop from it. It could be tiny, it could be big. But the way you buy in a store, right, is going to look much different than when you buy for a design firm. So that'll open you up to stock and dealer pricing. So then you have the next question. Okay, well, if you have a store and you have a design firm, are they one entity or are they two entities? How do you structure that? If they're one entity and you're buying, I'm going to use four hands, at 70% off retail, all of your client contracts, if that is you and you fall into that fold, should be marked up by vendor. And you wouldn't disclose the vendors to the clients, but the contracts would say that, again, right? You share, whatever word is more appropriate. You share your vendor discounts, you pass along the best pricing possible, and there isn't an exact number tied to your contract. And then when you're setting up your vendors and whatever software you're using, your vendor gets that markup number, and the vendor markup could be different, right? For Williams and Sonoma, it could be 10% because you're only getting 20% off. And then for a four hands, it could be 40% because you're getting 70% off, right? And so I would tell you again, don't confuse the two. And I only say that because, we've seen it. And it's just harder and harder to manage. So pick one of the two and then stick to it, and then make sure it's very, very clear for your team as well. So, but how are you sourcing, right? Are you buying from Restoration Hardware, or are you buying from Four Hands? Are you reevaluating your Four Hands volume on an annual basis and going back to them to say, hey, I'm at this cap or I'm at this number. What are your discount brackets? Do you have any visibility into that? Can you ask that to your rep? If your rep isn't helpful, can you ask that to the manager of the rep? We've seen a lot of firms over the years also do very well with buying fabric by the bolt, especially if they work with a custom upholsterer. The upholsterer can store it for you, but the price difference here, is huge. I actually think the designers would know more about this than I would, but it opens you up to a completely different price point. And even on leather, that's also something that stuck with me the most. The pricing on leather, buying it by the hide, is so much cheaper. And so anything with storefront light, anyone who has any type of product line, that's the way they're buying. And it just, your margins will explode. Stock and dealer pricing, right? We talked about that. How are you buying? Do you know how you're buying? Do you know if vendors offer stock and dealer pricing? What are the requirements for that? If it's not something that's on your radar, definitely look into it. And then I'm bringing up a collaborative. I would say for the bigger firms, we don't see a lot of that, but we did actually have somebody out of Chicago recently who said that they were comparing prices with a collaborative versus prices directly with a vendor. And I'm not going to remember who it was. But I do think if it's, again, not something that you've evaluated recently, it's something that you should be, right? And again, not every single day, but quarterly, annually, like a check-in, or if you have a collaborative reach out to you to say, hey, our pricing is really good. I think it's definitely worth an exploration to understand if you're leveraging your price points to the best of your ability. So client communication, right? And I'm sure I think all of us could probably improve in this area in one way or another. I know for us as a firm, I must have been 2 years ago, rolled out a how we work document, which is probably 15 years overdue. But it wound up being so informative and so actually such a time saver from our end. And so the firms that we work with that have done well, not even just from a numbers standpoint, but from a client expectation standpoint, are doing well because their clients understand what to expect. So back to the studio designer example. When you're getting ready to go into the purchasing phase, is your client clear that you require 100% payment on proposals, on every single proposal? Are they clear that a proposal can be used as a method of payment and that can be a convenient pay now link at the bottom of a proposal? Are they clear that a proposal is emailed to them? What is the expectation? And not only what is the expectation, but can you explain to the client what and how your markup is structured? So what does that mean? What does the contract say that you're marking up by vendor? Does it say that you're a fixed markup? Does it exclude freight? Does it include freight? If you had to break it down for the client, could you explain it to them so they're very, very clear? I wouldn't get into necessarily all of the nitty gritty, but I do think a beautiful PDF almost at every stage, and maybe it doesn't necessarily need to be at every stage, though we have some clients who do that. When they approach the purchasing phase with their clients, the clients receive a beautiful PDF with some highlights. We work in a software called Studio Designer. You'll receive a beautiful proposal. That proposal outlines all of the items covered on your presentation. You need to pay the proposal within 10 days or we lose pricing. Delay on payment of the proposal delays our project. What are their expectations? Because again, for all of us, and I'm in the client space too, that's, I think, where the miscommunication can occur. So are you clear? And are you clear on the procurement process with the client? So we've seen it called two things, a what to expect document and then a how we work document. Gets you across the finish line. Somebody had mentioned that pricing with the collaborative as a smaller firm gave them more purchasing power. And I don't disagree with that. But specifically, I'm thinking of Chicago. We just did this for I would say a meaty, a good size firm, 3, 4, 5 million. And they, so not a huge firm, but their pricing wound up, I want to say maybe the collaborative was better, but it had something to do with freight. And so they're going to test out this particular collaborative. So I just think don't ever take it off the table. It makes sense to review it. So just to go back to such a fan favorite of time tracking and employee costs. So remember, we have two revenue streams. We have our product revenue stream and we have our design fee revenue stream. Our design fees, well, when we're looking at revenue for our product, our cost of goods, right, are a direct cost. We have to buy the fabric to resell it. When we're looking at design fees, our direct cost can look and be harder to find. So do you know how much money you're making, whether it's from your own time or from your employees' time? And so there are 2,080 hours in a year. If you were billable 100% of those hours, and that would be 40 hours a week. There's people, though, that work more than 40 hours a week. So if you're working 60 hours a week, 40 of those hours can still be billable. You are billing $200 an hour per person. That is $400,000 a year. I'm actually giving you the 80 hours of vacation between Christmas and New Year's. So then it's the other 50 weeks of the year. And so $200 an hour, that's $400,000 in design fees if you were hourly by person, but that's by person. So if you have 3 people, right, that's 4 times 3. If you have 5 people, right, that's 4 times 5. So Do you know what those metrics are? So much of what we, especially like what we do, it is all reporting and metrics, but do you have the data to give you the information that you need? So again, I know, annoying and cumbersome, but track your time. For those of you in studio, right, studio's been making some improvements on time tracking. They have mobile time tracking coming out as well. Soon-ish is what I'm told. The mock-up looked decent. Harvest is a popular option still with many firms, especially I feel like we see a lot of larger firms in Harvest because of how easy it is to use. And because it does track flat fees versus hours spent on a project very well. And then what are your processes or with your team and even just yourself regarding how you enter time? Do you require that it's entered daily? Do you have junior time that's reviewed by a senior time? Do you have junior and senior time then reviewed by a director? Who's making the decision of if something is billable versus non-billable? A junior designer probably isn't the most equipped to make that decision every single time correctly. So what internal control processes exist on the time tracking side? We're not even at billing. Forget billing. We're not there yet. We're on a daily and monthly time tracking process first. So what are those processes for your firm? Is everyone clear of expectations? If somebody has a question, who do they go to? How do you structure your projects? Is it a junior senior on every single project? Is it just a junior and then a senior is overseeing a bigger project load? But make sure that that's clear. If it's not clear to you, it's probably not clear to the team. But you need to know billable and non-billable. And then I recommend, I learned studio designer 20 years ago, but through a client that's still an amazing client to this day. And this was a time when we were all in office. And so I was in office and I remember, and this isn't specific to time tracking, but I learned by receiving read marked up reports. And you knew when you gave a report to the principal. I remember I was accounting. I mean, like low accounting, but I was accounting. And so I was required to review information. And then I would give it to her for feedback. And if I got it back read, I was like, oh my golly, I did a really shitty job. And so that was the best way to learn. So we encourage our clients to have a similar workflow. So the juniors submit their time to the seniors. The seniors, if you have a director, submit their time to the director because they've now reviewed the juniors. If you don't have a director, they send it to the principal, but somebody needs to be giving constant feedback in terms of billable and non-billable. And I would tell you that feedback should be read and marked up on a report and then sent back to whoever that person is, because it gives that person receiving the feedback the opportunity to learn. And a junior is not going to stay a junior forever, or at least hopefully not, right? They're going to go from a junior to more of a senior role, hopefully within the same firm. And so they're learning that feedback. They're learning what's billable and non-billable within your organization, hopefully to add value to you and the firm as they move along their journey. Then you'll have a new junior, and that new junior would be following the same process. So if it's not part of your workflow, think through that. Think through how everyone is receiving that type of feedback. And I'm pointing feedback out specifically for time tracking, but I would also encourage it on anything having to do with project management as well, for everyone to understand, well, why are we eating the cost of an item? Well, why are we not passing along this particular, I don't know, additional labor or service charge or whatever? And the same with understanding and truly understanding what is procurement time versus design time. That's a really big question. And I think it can be really gray. And if it's gray, that's where potentially we're losing money. That's where potentially the team is confused. So we split the two up by saying that when the team is ready and literally clicks a purchase order, produces a purchase order, that's the time that procurement starts. Most firms are not billing for procurement, right? Procurement is covered by the markup. And we should be also doing a secondary evaluation to say, how many hours did we spend on procurement? And what was the markup on this project? How did we do? Did we do great? Did we do not great? And we did really terrible and then why. But if the team isn't clear to say, okay, well, what's really procurement, what's ordering and expediting versus what's design time, that's a big, or it could be potentially a really big number to lose. Also, when you're done with procurement and you're on installs, are you billing hourly for installs? Is the team clear as to what's considered an install? Is the team clear what's considered a design time? So just make sure that there's clarity around that. Oh, so somebody asked, somebody asked a great question. If I do everything myself except for drafting, what should I shoot for an annual profit on design fees? That's a great question. I would tell you a hard question to answer black and white, right? So going back to my 2,080 hours, there's 2,080 hours in a year. How billable are you, right? Are you billable 50% of the time? Are you billable 100% of the time? How many hours are you working, right? If you're working 30 hours, I can't expect you to be billing 40 hours a week and then 50 to 52 hours a year. Another question, House Pro has the option to include processing fees in the product markup. How do you feel about that? Oh, really great question. I would tell you, A, it's great that it's included. B, I would not like it mapped to that product line item. I would be bothered by that. I would like to see it separately. So that's great that they do that automatically, or they give you the option of doing it automatically, but then I want to see that as a line item. So I still want to see furniture and fabric and et cetera, processing fees, and that's on revenue. And then I want to see the same on your cost. So then I want to see furniture and fabric and whatever, and then processing fees and cost. So then I could calculate my margin. That's a really, really great question. So again, we spoke about this a little bit, but when you're reviewing your margins, review comp packages. If that's not something that you've done or that's something that you've put together, put a quick Excel chart together. We put together salary charts all the time. So a salary chart is obviously somebody, a human, and then their salary. So how much are you paying them? And then all of the additional extras, and everybody's additional extras can vary. And so employer taxes are in there, and then your benefits are in there, but benefits can include a cell phone reimbursable. And so do you pay a cell phone reimbursable or do you not? That is still, somebody's getting that money. That's coming out of your bottom line. So when you're putting together a comp package, make sure you're really looking and thinking through what are all of the things that you cover. So like we offer an accountable plan for all of our staff. So we're all remote and everyone works from home. So it's an opportunity for the team to go through what their home office expenses are and submit them back to the company for them to be paid, for the expenses to be paid tax-free. But that would be part of somebody's comp package. I would include that in my Excel chart. This is a great number to keep in mind. I actually also think it's super easy. And fine, let's say you don't have a comp package. Let's say you're like, I don't want to put together the Excel chart. I mean, okay, fine. But then you have 3 people and they each make $100,000. So you're at 300,000. So let's just say you know that. So then 300,000 and times that by 3, that's what I want your design fees to be at. And that would be 900,000. And is that hard? Yes, it is hard. Is it doable? 100%. It's totally doable. You could be at a 4.5 multiple. You could be at a 3.5 multiple. You should not, and that's like so hard to say it's black and white, but you should not be below a 2 times X. You shouldn't be absolutely, something is really, really wrong if you are. And remember, this is all a conversation of design fees, nothing having to do with product. So 3 times is your goal, and yes, it's doable. We talk about this a lot, actually, when it comes to, I would really say any business, but the design firms especially. So your senior level team members should have a higher utilization than your lower level team members, right? So they're more expensive, the senior level team, and you want them to be working on tasks that are more fulfilling and that produce a higher revenue for you at the firm. So a senior level, 80 to 90% for sure. A junior level, 60 to 70%. We've had a couple firms recently, starting last year, do some really great and creative profit sharing metrics around those utilizations and like the bare minimum of what they're looking for the employee to do. And it's been a great incentive. I I was actually surprised. So we've seen a lot of profit sharing over the years with employees and with product specifically. How well does a project do? Let's say that the profit on product is whatever, 300,000, and then more senior level staff will get a percentage of the product overall profit. But last year, maybe it was the year before, but recently enough, I've seen a shift a bit, and I've now seen incentives around billable hours. And I was pleasantly surprised in each of the cases, and it was successfully implemented and has made a big difference. It's allowed employees to make a bonus annually of 10, 12, like up to 15 or so thousand dollars. Really great questions, everyone. Any other questions, whether it's about what we talked about today on any of the slides or anything having to do with design and on the business side of design? If not, we could wrap up a few minutes early. Hopefully you found the information helpful. Our two websites are below. Yeah, so we don't necessarily, like, we as a firm don't necessarily have a revenue minimum. Jennifer, that's a question. It's more of a, what are your goals? Like, is your goal to grow and to build out a team and to understand profitability? Then we would be aligned on so many different fronts. So we're not necessarily looking at clients to say, well, you made $100,000, so that's not the right fit for us. It's really goals. Software is a big one. You know, what software are you in? How do you track? Are you open to looking at things differently? And what is your process? And our accounting process is rigid. We have one flow, and so you'll fall into our flow. And if that works for you, then usually we're a good fit for one another. If the retreat is of interest, here's the website for the retreat that's coming up at the end of September in Nashville. Every year has been a different focus. Again, this year is AI, which is really, really exciting. Growth, specifically with a consultant who grew Magnolia from 10 million to 100 million, and then legal, all about contracts and how to protect ourselves. Yeah, really, again, really great questions. What do I think of MyDoma as a tracking tool? So if hopefully I'm allowed to say, so I'm a longtime studio designer user. Just it's how I stumbled into this industry straight out of school, 19 years ago, I think now. There's a lot of value in a software like Studio. It is a big up. There's a big learning curve, and we tell that to clients who come to us, and I'll say, okay, I'll migrate you, I'll train you, I'll work with you. But you need to also be committed, and you also need to want that granular data. Studio is all about granular data. And so if that's of interest to you, then that's great. It'll work really well. If that sounds beyond annoying and not something you're interested in, you're going to just hate every second of it. MyDoma was acquired. I don't know, at least from my perspective, if they're going to be forcing everyone out of MyDoma and into Studio. So as a tracking tool, I mean, to me, they're two different things. So, right, MyDoma is MyDoma and Studio is Studio. Sorry, that was a long answer. Anyone else? Okay. Well, thank you everyone so do you prefer that clients pay exclusively via wire, ACH, or check? Do you feel CC payments open our industry up for fraud? 100%. Yes, I am not a credit card fan. Not that I'm not a credit card fan, but no, I mean, just over the years, over the last 2 decades, I've seen a couple scary situations. And so we don't recommend using credit cards or allowing clients to pay with credit cards. Can you have a one-up? I mean, sure. You certainly can. But it is scary, right? Because somebody can dispute with their credit card, and you could have a $250,000, $350,000 proposal that winds up getting disputed, and you already started the furniture orders. So again, just my own personal preference. Wire ACH is would be what I would recommend. Check washing is a thing, right? I mean, it happens. We've seen it, I would say, like almost every single year, the last couple of years. So I would try to discourage clients from sending a check. I also want my money faster. So ACH and wire is a great option. And again, if you can, stay away from credit cards. But yes, really great question. Anyone else? Before we wrap it up? Yes, thank you. Thank you so much. Thank you for all the great questions. I feel like questions are always helpful. Keeps all of the conversation moving. If you have any further questions, please reach out. Here is my very, very long email from 2008. So that was a long decision back then. They do not teach this at school. Yes, I know, I'm aware. And there's no easy, it's funny, sometimes we get the question of like, well, how do you learn all of this information quickly? And the answer is, you don't. It takes a very long time. So again, thank you everyone for joining. I hope you found it helpful. Reach out with any additional questions, and I hope to see you all soon on Business of Home.